Welcome back to another Stock Market Open live stream. Today we have a little bit of red as we are on the eve of Nvidia. Take a look at this. And Dow down 28, S&P down 35, Nasdaq down 41. Look at bonds. This is really interesting. A 4.4 basis point move here on the 10-year. Not exactly sure why, but this is pretty common for this to sort of bob around the bottom. That's what we always like to say. It's bobbing around the bottom. And pop this out a little further. You can see it's pretty typical when you go out on. Let's go to the year-to-date chart. This is all about sort of a trend to the downside, but boy, there's a lot of volatility on the day-to-day. It's up, it's down, it's up a lot, it's down a lot. It's kind of interesting how yields are moving. But this 4.4 basis point yield move here is interesting because you align it to the 2. The 2 is actually only up 1.8. So this means you're a little closer to uninversion by about 2.2 basis points. So somewhat interesting. Which, again, geez, yesterday we were at like 11.5, so we should be closer to something like 9 basis points or so to go until uninversion. And unfortunately, when the yield curve inverts, the uninverting of the yield curve usually coincides with the start of a recession. No guarantees, of course, but we shall see. But I know that's what a lot of folks get nervous about. So I don't know. It could be that stocks are somewhat moving down in anticipation of an uninverted yield curve. It could be that stocks are moving down in anticipation of Nvidia. It's actually probably likely since, frankly, if Nvidia tanks, the entire market will probably tank. You are going into this Nvidia earnings set with the highest market volatility or historic volatility for Nvidia that we've seen in the last 3 earnings. It's the first earnings report post split, and it is a report where we expect not necessarily the best news, like delays with Blackwell. Curious how that'll affect revenue, and companies that have said, hey, we're gonna delay our H purchases and wait for the Blackwell purchases. Who knows? So it's going to be fascinating, but it could be markets are teetering on that. Let's take a look at the open here. Nvidia can add or shed $300 billion after its earnings. Yeah. Well, and the question about that is, what then happens to the broader market? That will be the question. All right, good. So let's see. In terms of caddies, today is the 27th. FHFA house price index month over month was down 0.1% versus the up 1.1% expected. We got the CoreLogic S&P 20 city month over month average, sort of a slightly different pricing gauge. That was actually up 0.42 versus up 0.3 expected. Consumer board confidence coming in at 100.8, and Richmond manufacturing -14, which is a little better than the last one. Nothing super fascinating out of that data, but it is possible that S&P CoreLogic data with home prices edging up there, it could be could be associated with what Barkin told us the other day, actually just yesterday, about, hey, well, what if shelter inflation comes back? That could be really bad. So, in which case we would have to move slower. But then, of course, that would just be inducing more of a recession. So anyway, it could also be that the Atlanta, Q's dropping now. Atlanta real GDP now forecast that came out yesterday, that came in at 2%, still somewhat suggests the economy's a little on the stronger side, potentially suggesting higher yields rather than lower being required. See, the Qs are dropping off a little bit more there going into the open. See, IWM, the Russell, down about 91 basis points, almost twice as much as the Qs. somewhat implying some fear going into the open there. And look at BTC. I mean, you really gave up here over the last 24 hours or so. I mean, we were riding high above the 63.8 line, and we've just straight given that up almost every single hour, lower and lower, lower and lower. All right, we shall see. Let's listen in here for a moment.
We just don't know what to do with them yet. I mean, if robots are going to just deliver us coffee, we don't have... Hold, wait a second. If they're going to deliver it at Starbucks, that's pretty good. They can wait online.
Could change everything.
I think that could be what this whole robot thing is about, is waiting in line behind someone who's triple venti cappuccino with skin wet, 5 pumps.
It's not a question of when. It's not a question of whether this future is coming in some ways, but when, Jim. And the markets are still trying to figure that out and discount that.
Well,
and that's why we had an enormous rally for a period of time.
What happens if...
By the way, Morgan Stanley today, Katie Uberty, who you like,
the chart
and her team,
on?
Our global tech team projects the big four cloud service providers will generate $176 billion of operating cash flow in calendar 2025. And note the average...
So much money in servers right now.
40% in 2024, suggesting the hyperscalers' pockets are still deep enough for further spending.
Well, look, I think that we have to...
And therefore, don't worry about NVIDIA's upcoming release. U.S. semiconductor analysts expect to deliver a strong beat and raise, dispel concern, and drive share price rebounds for the overall AI supply chain. Those are some pretty bullish words.
I know, it's very bullish, and I wanted to hang my hat on it. My problem is that if you're on a Jensen Huang call, it's mostly Colette Kress, the fabulous CFO. There's
some of these drops, by the way, in the pre-market. I'm not sure if they're like just low liquidity or how sustainable these are. So you got to be careful sometimes looking at these. But like for some reason, Lowe's says it's down 6.77%. I don't know that I actually believe it's going to open that low. I did notice that Palantir is sitting at about $30.30, which is down almost $2.70 from 33. So it's started to kind of roll back to some of the numbers we've been used to previously, sub 30. To the upside, you don't actually have a lot to the upside, and if it is, it's up nominally to the upside. So fascinating. I will say something that was mind-blowing was Ubiquity yesterday was up substantially. It was up 6% yesterday. It was crazy. So I've been pitching this one since about 140. Right here in this trough. We did a course member analysis on this sucker, and we're like, I gotta give me some more exposure to this. What's going on over here with the inventories and the balance sheet? This is really good. So, it's like, maybe a 7-ish% exposure is probably a little less, but is somewhere where I think this sort of fits in, because you do have some small cap, small business risk, recession risk, but yeah, I mean, just in the near term, it's just been absolutely killing it. So, and it was negative after earnings, here, the recent ones, and then it ended up closing, I think, green on that day, and it's just been rallying since. It's only been a few days here, but whatever. Okay, well, keep going over here.
In the 70s. Okay, yeah, that's fine.
And what would happen? Not the 70s, the 80s. What would happen is there'd be companies that just say, look, I want you every day.
They're still talking about robots. Okay, we're just going to do this.
Last month as a sampling of that broadening out trade that we're talking about here. You see consumer staples, you see real estate, you see utilities really leading that list here, some of the dividend payers as well. Is this indicative of the type of broadening you might see through the rest of the year, or is this just a short-term play on potentially lower rates?
Right. And well, lower rates I think we're going to get. The question is, do we get as much or more than is already discounted?
More.
The thing that I'm more skeptical about is the other piece of the soft landing, which is, are we going to see a strong consumer continuing to support earnings? Utilities is kind of interesting because it can also be a defensive play. If the consumer pulls back, the AI story remains intact. We continue to need more energy. So that's something that probably is a little more.
I think just today at the front page of the Wall Street Journal, I'm pretty sure, they're talking about how NVIDIA can, I don't know, remember where it was. Google it really quick. NVIDIA, 50%. Energy. Let's see here. Oh, yeah. Oh, okay. NVIDIA partner says it can cut data center energy by 50% as AI boom strains power grid. Okay, it's CNBC. Let's take a look at this. This has been sort of my thesis, is that these chips are just going to get so much more efficient that they'll end up cutting energy usage a lot. But look at this. This company uses an immersion cooling technology. So, you know, it looks like you're losing some vertical space here, but this usually has to do with water cooling, I'm guessing. What is this? Hypercubes contain servers fitted with NVIDIA processors, which are submerged in a synthetic oil that draws heat away more efficiently than air. Company said this reduces energy consumption by 50% compared to traditional cooling. It's pretty crazy. Immersion. Liquid cooling, picking up the space. Yeah. Servers are submerged in oil within container-like hypercubes to draw heat away sufficiently. And it just seems backwards. Oh, yes. Just submerge this chip. It'll be fine. But, sir, this is a $40,000 chip. Do it anyway. Okay. So, but anyway, I do think, I mean, outside of even just this immersion technology, I do think actually the chips will just become so much more efficient, and the demand won't outpace the cooling efficiency gains. So, in other words, if cooling efficiency or energy efficiency grows at 30% a year, maybe demand might only grow at 10% a year, just as an example. But I don't know. I think the utility story personally feels a little overplayed to me, but I'm also not really a utilities investor, so maybe I am mistaken. But that's okay. I am neither long nor short the utils. I have no interest in the utils. Maybe nuclear. Oh my gosh, every single one of them is on commercial. But maybe the nukes. The nukes I find interesting. But the problem with the nukes is you know, how do you invest? I know gosh, what was it? There's some startup that wanted to do like mini nuclear power plants or whatever in towns. Some of these things are pretty untested and face massive regulatory burdens. Oh yes, we are going to put a nuclear power plant everywhere. Ah, enjoy dealing with permits from everywhere. Oh well. Alright, so Q's a little bit of a recovery here after that sudden spike down. And NVIDIA down about 80 basis points, right under that 125 line. Super micro back down into the mid fives. You know, it ran over 6 there for a hot minute. Look at that. You ran back up to 617. Came back from the dead over here at 494. Ran all the way up to 617 above my line over here. And now you're just bleeding out again. Tesla down 3% yesterday, down another 21 bips this morning. That's pretty nominal. Pretty nominal. Day in the life of Tesla investor. So, all right. Let's say what else. Okay, let's take a peek over here. Oh yeah, I don't think I ever looked at to verify the inversion. Done. Let's see here. Ah, this says 10.5 is where we sit now. We're getting there. I'll put a little screeny up in just a sec. But it does make me kind of nervous. Oh, I can't. Why is it doing that? I'll try this. Yeah, my, oh, how weird. It's always the Windows stuff. It's like my my mouse shortcut thing is just pinwheeling now. Oh, how unfortunate. It's always the Windows. Adobe crashes. Mouse shortcut app won't open. Whatever. Anyway, the point is, the line is popping up again a little bit. This is the highest level we've been since the first week of August in the uninversion of the yield curve, and it's aggressively moving up. It's been moving up since August 19th. Which, let's see what the market's done since August 19th. If I go to our chart. Oh yeah, look at that. You basically peaked out pretty close to that. August 19th was right here. Look at that. Peaked out. Right here was the close. So at about 482-ish. Peaked out on the yield curve. Now the yield curve is rising. And unsurprisingly, seeing a little bit of pain in stocks. That's common. Somebody says Super Micro just dumped. Oh, goodness gracious. Why does it say 7%? Yeah, look at that. Wow. What happened here? Somebody is dumping. Insider NVIDIA leak. Somebody has heard of problems at NVIDIA. Oh no. Let's see if there's any news on Super. Otherwise, I think I'm going to restart this sucker again. Super Micro. Oh, Hindenburg short report. Not Hindenburg. No. The humanity. Oh no. They're back. Oh no. I remember when they had a short report on Enphase at like $30. I'm like, bro, this is ridiculous. Alright, let's see here. Hindenburg. Kind of curious. Hindenburg, yeah, 2 minutes ago. Hindenburg research. New from us. Fresh evidence of accounting manipulation, sibling self-dealing, and sanctions evasions at this AI high flyer. I wonder if they'd even put a dent in NVIDIA if they had a short report on NVIDIA. Supermicro, fresh evidence. Yeah. Supermicro, $35 billion server business in Silicon Valley, California that has ridden the wave of AI enthusiasm. Our 3-month investigation, which includes interviews with former senior employees and industry experts. Former employees, okay. And a review of litigation records. Well, litigation records are public. So, you know, how many former employees can you get? Undisclosed related party transactions, sanctions and export failures. Temporarily delisted in 2018 from NASDAQ for failing to file financials. Charged by the SEC for widespread accounting violations back in 2020. Okay, I mean, some of that is probably just old and public, but what is this? According to a lawsuit filed in April 24, Supermicro waited only 3 months after the SEC settlement before restarting improper revenue recognition, recognizing incomplete sales, and circumvention of internal accounting controls. Former senior sales director, I don't think the behavior of this company in many ways has changed in the 5 years since I started. Okay. 3 senior employees who left in 2018 amid the scandal were rehired. Related party suppliers, Ablecom and CompuWare, controlled by Supermicro's brothers, have been paid $393 million in the last 3 years. Oh, nice. Ablecom is also partly owned by Supermicro. Relationship is oddly circular. Supermicro provides components to the entities which assemble them, and then sell them back to Supermicro. They also rent warehousing and factory space to Supermicro, even though it has its own sprawling facility. Interesting allegations. CEO's brother has an odd relationship with a key customer. In Feb 24, Supermicro made an undisclosed investment in a tech startup, Lambda Labs, as part of its $320 million funding round. In August, they signed an unusual $600 million contract to lease a space at a California data center and sublease it to Lambda. The CFO glossed over the questions about the reasons for this arrangement. Supermicro has claimed its liquid cooling technology will revolutionize the industry. But at a recent industry conference, Supermicro featured related party Abelcom's liquid cooling solutions, per an Abelcom engineer. Abelcom has several patents for liquid cooling, despite the Supermicro's never disclosed any related party involvement. This is long. Jeez Lord. $30 million worth of product to Russia. Wow. See, this is the thing. They just like, I think they purposely put this stuff together here because they know people aren't going to read the whole thing. And it'd be kind of interesting to read the whole thing. I'm not going to do it right now. But it would be very interesting. Supermicro in Holland. Super server. This is wild. See, what's really wild is you got to ask yourself, how many Friday put contracts do they have? I mean, their puts are going to print at the open. This is how these people make money. Buy a crap load of puts for Friday. And then release your short report. And mint. That's crazy. Make AI summarize it. Yes. Okay. I will. Good idea. Summarize. Okay. It gave me one line. So dumb. Okay. How can I summarize better? Oh, there we go. Page summary. The article investigation investigates accounting irregularities, related party transactions, sanctions evasion. I mean, we already got that. Key findings. Okay, it's just relisting some of the key things that we major customers like CoreWeave, Tesla, Amazon, AWS have significantly reduced or stopped doing business with Supermicro due to product quality and service issues. Well, we didn't see that. We saw the brothers part. We saw the liquid cooling part. We saw the transactions. We saw the SEC. We saw the delisting. So we saw everything except this slowdown in sales. Okay, let's look at the slowdown in sales part. Former employees say Supermicro's business culture has not really improved. Former sales director, I don't think the behavior has changed. That's fine. Where's the sales part? In September 2023, Supermicro was the exclusive server supplier to Tesla per Barclays. Dell has now won major deals from Tesla, eroding Supermicro as of May. Tesla, like CoreWeave, is one of Supermicro's largest customers. Supermicro had an exclusive relationship with Tesla for AI servers. We believe. Yeah, well, they could have been wrong on that. And then it looks like they went to potentially Dell. Failed relationship with Amazon. A lot of people don't know that they were building the AWS clusters until he pissed off Jeff Bezos and deliveries didn't go. And they got thrown out of there. Supermicro sales director. Move to Dell. I wonder if Dell's going up on this. Probably have puts on Supermicro and calls on Dell. Nope, Dell's down on this too. That's crazy. The business of short reporting. Oh no. They're all going crazy.
David, they call it because they want to make a fancy term so that nobody at home understands. David, this is de-risked.
De-risked.
It's de-risked.
De-risked. The drawdown has occred.
Yes. Oh my
Yes,
God!
the old
You
drawdown.
private credit guy.
I know, drawdown. I still just love that stuff. The genesis of words on Wall Street. It was a drawdown. We had nothing to do with it. All right, the opening bells. What do we got? Yeah, 4.5 or so minutes away. Don't go anywhere. We're right back.
Every time you say don't go anywhere, I will go. I will do
this
the
morning,
opposite.
and first up, Leslie's announcing a new CEO today. Jason McDonald will succeed the former CEO who left the pool and spa retailer a little over a month ago after the company cut its outlook because of difficult industry conditions. Now, that weakness was due in part to unfavorable weather this pool season and the impact of high inflation. Next up, former President Donald Trump says that he would put Tesla CEO Elon Musk in his cabinet if Musk has the bandwidth. In an online interview posted yesterday, Trump praised Musk as a genius and said it was more likely that he would involve the Tesla CEO as a federal cost-cutting consultant. And finally, NFL brothers Jason and Travis Kelce today reaching a deal worth more than $100 million with Amazon for their New Heights podcast. You can follow all the latest company buzz on TREN Go on your Bloomberg terminal, Shonali.
And a quick check on futures here before we head to break, because of course ahead of this market open, you do have S&P futures sinking around 0.3%, more so for NASDAQ 100, down nearly 0.5%. Same too for the down 0.7%. Stick with us for the open. This is Bloomberg.
Nope. No, thank you. Thank you, but no, thank you. All right. Oh boy. So, I guess we'll get to see some fallout. All right, let's write some of this down. Super microcomputer. Oh, they're already recovering a little bit. Super micro. See how Tesla's doing. 57 bips now. How about Nvidia? 1.2. Oh, let's get Apple up in here. Okay, what else? The Qs, BTC. QQQ. BTC. What else? Enphase. Facebook's at 520. Home Depot. Oh, I wonder how is Lowe's still down? I think it was a pre-market sort of abnormality. Nope, still says it's down 6.7. I don't really believe it, but we'll see. Oh, look at Tesla rally. We will find out within 2 minutes what's going on with Lowe's. And Supermicro down about 7 now on that report. So, we shall see. All right. So, Tesla is only down about 13 basis points now. Tesla trying to rally? We will find out. All right. What else? Let's see here. We are now about 55 seconds away. And may as well get some tunes ready. Some loony tunes. Yeah. There we go. All right, folks. Tesla's rising into the open. So are the Qs. Let's see if we can get some optimism back into the market. Breathe some life back in. Not sure why. Yields are up, but the yield curve is steepening. Usually when we uninvert, things get a little tense. Tesla's about to gain the lead. Just down 1 basis point now. Let's get to Jimbo as the bell is coming.
Healthier historical volume growth than peers. and a number of other notables.
I was surprised that they had 4 different things.
Yeah.
I mean, but they downgraded Pepsi. That's significant.
Keep an eye on this above the day. There you hear the opening bell here at the New York Stock Exchange. Take a look at the real-time indices. You can see there's going to be more red on that board, given at least what futures were. Doing the honors here, IMG Academy and Merrill, a Bank of America company. They're celebrating.
All right, there goes Tesla up 0.25%.
The lead.
1/3%. Nice little rocket ship by Tesla right out of the gate. Whee! Rocket ship by Tesla. Rocket ship by Nvidia. Q's trying to recover. Supermicro's trying to recover. I still don't know what's going on at Lowe's. There's no real news on it either. Okay. Oh, there comes a red candle for the Qs, but a larger green candle for Tesla. Oh my gosh, how large can it grow? It just keeps going. Almost up 1%. Look at that. That was aggressive. Let's hop in here.
The U.S. Steel transaction,
That's why I bring
as
it
you
up.
know, and whether, in fact, Cleveland-Cliffs can, if they are given the opportunity yet again, if the Nippon deal for U.S. Steel.
Still going. 80 bips now.
There was some,
I'm with
obviously, I
him.
had a large shareholder of U.S. Steel, Matt Haber, on from Pentwater a number of weeks
Now,
ago,
what did you say was
questioning
the
their
final
wherewithal
bid?
to actually
There were 5 bidders.
Yeah, but the deal's done at
AMD's up about 85 basis points, by the way, also running somewhat like Tesla here. So it seems like Tesla and AMD are really trying to push. We'll see if that holds. But both of them are like, and honestly, in like a neck and neck race here. Look at that. Oh, AMD's pulling ahead. AMD got to 1% first. Tesla's about to get to 1%. It's at 95 bips. Oh, AMD's turning around a little bit. Oh no, red candle. No, giant red candle. Womp, womp, womp. Just crazy. This is why I hate the first like 5 to 10 minutes of trade. This is like, oh, look, there's an uptrend. Giant crash. Same on Tesla. Q's. Starting to rotate down a little bit here. Nvidia's getting rejected. Supermicro is only down about 5.5 now. They were down as much as 10% there for a moment. Oh, Tesla goes back. You cannot. Tesla takes the lead over AMD. You cannot stop the Elon. All right.
It's true.
The Republicans and the Democrats do agree that Nippon Steel should not get this.
It's interesting when we have now this idea of national champions. You raised this, but, did you see what Japan and 7-Eleven? I mean, you've got Couche-Tard.
Why are we not talking about Couche-Tard? This is an amazing, important
and
deal.
yet Japan also seems to be
Amazon's almost down 1% too.
as a national champion, and perhaps will not allow for a sale there. You do wonder if this is going to play as sort of economic nationalism continues to rise.
I think
whether
that
we're going to see fewer and fewer cross-border transactions.
Yeah, well, we cannot underestimate the size and scale of 7-Eleven.
No.
Really, really big. By the way, what do you think is the number one performing 7-Eleven in the country?
I have the one in the Hamptons.
The one in Montauk.
Really?
Yeah, number one.
I know that
Really
one.
interesting.
I've been in that one.
I know you've been in there. That's why I mentioned it.
I bought some.
Yeah, whatever. Okay. Qs are rising now. Tesla's up over 1%. AMD's almost
because
up.
Nvidia, I mean,
Percent. Both doing well now here. Look at that. Right around 1%. AMD and Tesla. Yeah, there we go. Lowe's fixed itself a little bit. It's only down 0.8. That's what I thought. Thought that was a little unreasonable. Bitcoin. Do we have an omen? No. No omen. But look at this. Nvidia's about to gain the lead. Look at that. Pre-earnings rally along with Supermicro. Wow. That's crazy. It's about to go green. Come on. You can do it. All right. Let's see what some more news is. It's always an interesting first few minutes. BTC just moved down a little bit? It's hard to tell. It's just been barcoding here. I feel like I can scan that. Take a laser and scan it. Okay. Home price report was mixed. Consumer confidence, that's fine. Talked about that. Corporates are probably light. Let's do with bonds, boring. Energy stocks have limited scope to outshine peers this year. Yeah. Oil and gas stocks have gone from market leaders to laggards. Okay. Outflows from energy ETFs have been relentless. Investors sold 1.6 billion or 1.26 billion of funds so far in August. Oof. August isn't even over. Second red candle there on BT Sizzles. Okay. What else? Eli Lilly selling Zep-bound vials at 50% discount. Okay, I don't really care. T-bill and chill is a hard habit for investors to break. It's been the ultimate no-brainer for more than a year. Park your money in super safe treasury bills, earning yields of more than 5%. Rinse and repeat. Yeah? Even now with Fed officials poised to cut rates, a move that would instantly push down yields on bills and short-term debt, money market funds are thriving. Investors in cash and cash equivalents appear to be perfectly happy to stay where they are for now. Yeah, I believe that. Milk the risk-free treasuries. Milk it. Interestingly, Nvidia didn't really want to keep going there. A little bit of a head fake. Qs are still trying to figure out a direction too. Okay, let's go back in over here.
How is Nvidia doing in this moment relative to expectations? How has the market perceived that? And when your valuation is so high, any little bump, 100%, right? And in the short run, any little bump is going to be negative, not only for the stock, but for the market overall. That's a very different question than what is the long run thesis for AI? Are we well on our way? Is Nvidia one of the companies, not the only company, but one of the companies that's going to get us to this huge revolution, right? And change in how we all do business. So, I mean, the short run, absolutely. They got to hit it spot on, right down the middle in terms of, the pitch, right? But at the end of the day, this is just a short run kind of a market, assessment of have we overshot right now? It has nothing to do with the long run thesis here.
Well, that was my question. Why not wait? It's interesting. If you take a look at the Philadelphia Semiconductor Index, for example, just year to date, NVIDIA up more than 150%. It's really up 154%. To get to the next best performing stock, it's Coherent at about 80% on the year. Why not either look for stocks that are sitting at lesser gains, better valuations, or just...
Wow, Tesla just went negative. It was up like 1%. Now it's down.
I think that is the right thing to do for the average investor, right? I mean, I think the average investor is, they're either, if they're passive, they're getting a ton of NVIDIA. Even if they're active, unless they're taking massive tracking error to the index, they have a whopping amount of these types of companies, NVIDIA's and, the big tech in their portfolios already. So 100%, and as we see the equal weighted S&P making new highs, all the more reason that, what you're asking, I think, is 100% valid, that for the average investor, tilting away from this a little bit is probably the smart way to go, even if you believe in the long run AI thesis.
Dana, we have to leave it there. That's Dana Dioria of InvestNet. We thank you so much for your time ahead of a very critical set of earnings this week. And of course, there's a lot of economic data this week as well. Now, coming up, we're going to talk to Bob Sloan from S3.
Yeah, all right, let's take a look at this. So the Qs just legged down a little bit from about negative 40 basis points. Tesla, don't know what happened there, but I mean, it was up 1%. Let's see if there's any news. I don't particularly see anything. But you never know. Supermicro's back down to 7%. Tesla's legging down more. Nope, nothing there on Tesla. But it's almost down a full now. BTC is giving you some more bearishness here. Nvidia rotating down. It's trying to get a little pop there on Apple. Nvidia is trying to pop up a little bit. Come on. Oh, wow. AMD just gave up its gain, too. Gee whiz. Gee whiz. Somebody says, Ross Gerber must be selling more. Ouch. Oh, now they're talking about Hindenburg here. Let's listen in.
By the way, Supermicro is a company that works very closely with NVIDIA.
Right.
And they are not partners like people think. They are HPE, Dell, which reports this week, Supermicro. They're all kind of in this, we're helpers if you want NVIDIA. Because remember, you can't just order NVIDIA. You don't call 1-800-NVIDIA. Unlike, say, Charles River Labs, you can dial 1-800-LabRat.
Hindenburg says they've conducted a 3-month investigation, including interviews with former senior employees, industry experts, litigation records they've reviewed, international corporate and customs records, and they claim to have found glaring accounting red flags, evidence of undisclosed related party transactions, sanctions, and export control failures, and customer issues. Again,
suboptimal.
We do not have in any way a response, but that is why you're seeing the stock
we want to
down.
get response, but we also know,
and they go
this is
on,
a
and then
company
it goes
I
on
always
from
ask,
there.
do you have enough cash? Do you have enough cash? Because they've been doing these equity offerings, and their growth is so great that they've had to do equity offerings.
I just wonder at what point companies like this, like what value add are they ultimately when demand slows and the hyperscalers who already do make their own equipment that incorporates NVIDIA's chips, do they really need Supermicro over the long term?
I have a tremendous admiration for Michael Dell. Okay.
Yes.
But Dell's stock went up to 170 with the belief that there's unlimited demand. And then when we heard that Blackwell, which is their current iteration, may not ship in time,
that's NVIDIA's
in volume. That's look where Dell went to. So there's your example of what happens if demand slows, David. That's what it looks like. That's what you should be prepped for. HPE, same deal. And now, obviously, Supermicro. Now, Supermicro is it's somewhat impenetrable.
It's not as straightforward as you think in terms of, we always talk about the chips, and Amazon's buying the chips, and Meta's buying NVIDIA chips, and Microsoft. And then Dell and HP. But if they're putting the servers together, but it's sort of a more mixed picture in terms of some of the hyperscalers put them together themselves. Right. They have these companies that do it for them. Then they also buy stuff from Dell and HP. Right. Then they also use Supermicro.
But the big guys know how to handle
it.
The big guys know how to handle it. And one of the reasons why I'm upset that people think that it's all smoke and mirrors is that if you look at Meta and what Meta's done with Meta AI,
I know.
Holy cow. Although if you Google Zepbound on Meta AI, it doesn't have the latest information. That's important. If you go to ChatGPT, this is a good example. I like to go to all of them. ChatGPT has what's the normal dose of tirzepatide, and if you go to Meta says, look, we don't really know. I mean, it's good that they admit that he admits it, or she admits it, or whoever admits it.
What's the point you're making here?
The point is that Zuckerberg,
yes,
who apparently is claiming doesn't want to be pressured on something there's pressure on, but his is still behind. Unless you're doing
his AI is still behind.
Yeah, Meta AI is really good for social, what's Kelsey's contract like. I mean, and it's not up to date as much as ChatGPT. But David, I find it mellifluous when it's got the right information.
That's such a good word.
And it has a little bit of sense of humor. It has a twinkle.
We continue to see sort of this movement. Again, we mentioned big tech being down. The banks, once again, are benefiting. There was an interesting herd on the street today, Jim. I'm sure you saw it, talking about should you be on the other side of Buffett. We talked about that with Bank of America yesterday.
That was a very good
almost
piece.
as though they were listening.
Part of the contest that I have to stay closer to of herd in the streets. But I thought that was very well. Well, yesterday I said I think it's a buy. They also have that bond portfolio that people don't really like. And that gets cured by lower rates.
Lower rates help the value there, yes.
Yes, they do. Look, David, the group I'm watching is solar.
Really?
Because I regard solar, now this is something I practice. I literally tried to practice this. I do not want to appear, because I'm not pro or anti, but solar versus oil. We know that one presidential candidate favors oil and is not as worried about climate change, and the other one favors solar.
or favors renewables.
Renewable energy.
Yes. So it's wind, solar, maybe even nuclear power.
So that's what you need if you really want.
Yeah, there is a story here about what is this? About Buffett and Bank of America. Take a quick peek at this here. It is Wall Street Journal, part of the column, is part of the 8th annual Herd on the Street. Warren Buffett, Berkshire has recently been selling down some of its long-held Bank of America. You might consider buying. Over the past month, Bank of America has underperformed the KBW Nasdaq Bank Index, down about 4% versus the 1.5 in the index. Given Buffett's lifetime record, it would be hard to fault somebody inclined to follow his lead on the trade to basically leave. But Berkshire's motives are opaque. As of mid-August, it still held roughly 12% of the outstanding shares. I don't know. Yeah, that's what I was going to say. I'm like, is he pricing in recession fears? When it comes to the recession fears that have at times spooked the market lately, Bank of America might be among the lenders better positioned for such a scenario. Depends on the consumer loans and where they are. When they look at stress tests, they're referring to Fed stress tests. Deep recession remains unlikely at this point. I always get scared when people say that. Bank of America is no exception. Fed were to cut. The bank expects its net interest income would be lower, though, in the fourth quarter from the second quarter. Bank of America has a vast portfolio. Bottom line is that Bank of America's net interest income is expected to grow 5% in 2025. Let's see. On top of that, there's a general unknown of what will happen with variables such as loan growth, Wall Street deal making, mergers, acquisitions, all that costs money for banks when they don't do it. I don't know. Oh, Buffett. Buffett sells Apple. Buffett sells Bank of America. And it's not like the full stake, which is interesting because, I remember during COVID when he sold the airlines, he's like, oh yeah, we don't trim. We're either in or we're out. And now it just feels like they're trimming. I don't know. Wouldn't be surprised if you talked to him. He would think that things are a little excessively greedy right now, would be my guess. And my guess really is that based on this, everybody thinks the stock market's just going to moon when interest rate cuts come. I think I'm a little bit more inclined to think that some of that interest rate mooning may already be priced in. But we'll see. Let's listen to Jimbo for a moment.
I think that the argument
Tesla's down about 1.5 right now.
Fair disposal of overlap is going to be seen as being facetious. And I think a judge will say, you know what? We cannot stand by another case of spin-offs that don't work. Even though I think the spin-off company, the buyer, could be real.
Yep.
They also own some Piggly Wigglies.
Piggly Wigglies. Can never get tired of saying that. No. All right, I'm going to do a very quick bond report because the music's already playing.
Okay.
Check them out. Treasuries, how they're faring this morning, of course. Let's take a look at yield, shall we?
Oh, I thought they were going to read them. I guess I have to read them. Okay, fine. 10-year still sitting at up 4 basis points. And I want to say the 2 years only up like 1 or 2. 1.6. Oh, big green candle there on the Qs. That came out of nowhere. Look at that. Big green candle on the Qs. What's driving that? It's an NVIDIA pump. Last 3 minutes here. Look at that. You actually had a dump here. You had about a 3-minute pump there on NVIDIA. And Tesla. Ooh, Tesla also at about a 3-minute pump right here. Ooh, and Bitcoin. All of a sudden, you got a little bit of a reversal here. Look at this. Might be too soon to say for sure. Usually I like to wait for 5 minutes, but this is interesting. 3 minutes on Tesla. And I'm going to get rid of lows on that list there. It's kind of confusing. Up on the Qs. Oh, Apple. Nice move on Apple. Let's try Meta and Facebook just to see where they say. Yeah, here's Meta. And then, Microsoft. Meta and Microsoft. Microsoft not pushing the way Meta and Apple are right now. Yeah, Meta and Apple had a nice little push. And Q's did as well. Let's see how it lasts. Nice BTC move. Okay, what else? I know this steepening yield curve. me see. Is something people are paying attention to, but I'll flip this for a sec. Let me see where it sits right now. 210. Yeah, Bloomberg's on commercial too. 210. 9.5 now on the inverted yield curve. Now it's almost there at uninversion. And then here's Tesla sitting just down about 1%. Not that big of a deal. You know what I did notice is that, oh, look at that Q's recovery. Wow, look at that. You had a downtrend here. And the downtrend was still going even after about, you know, what? How many minutes did you have here? 1, 2, 3, 4, 5, 6, 7. 7-ish minutes of downtrend. You could even argue that some of this was part of the downtrend. But now you're getting a reversal in the Q's. It's possible that you revisit. But right now, it looks like you're getting a nice, and you're almost at a 5-minute reversal to the upside. And let's see here. Is that driven by, where's NVIDIA? Yeah, there's NVIDIA right at the 125 line. Let's see if it can hold that. Okay, so look at that Warren. Let me go. Let's see here. Harris Rising polls has investors rethinking Trump trade bets. Yeah, well, that's much more in balance now. Home price gains outpace inflation. That's fine. California's EV dreams face an awkward reality. What's that? California wants some insurance against pump prices, but proposing that oil companies hold a minimum stockpile in the state. Let's see. Oh, this is a mess. We'll come back to that. Bowel dovinousness, feature for bonds test. Why rate hikes don't derail the economy. That's fine. I'll take a look at that later. Apple to let iPhone users delete the App Store and Safari. Wow. Delete the App Store. Like, what happens once you've deleted the App Store? Like, how would you re-download it? I guess maybe you could go to, like, their website. Maybe that'd be the way to do it. Like if you Google iPhone App Store or something like that. That's crazy. Huh, all right. Listen in here. Nice run there, NVIDIA though. This was down like 1.5% there for a moment. Now it's only down 37 basis points. Tesla, though, still sitting down about 1.5.
Until next year, when risks around interest rates and the U.S. election have faded. For more on this dilemma, we're joined now by Bloomberg IPO reporter Bailey Lipschultz, who has been writing about this dilemma all year long. And you look at what has happened this year so far. The companies that have gone public, even the ones that have hit potholes along the way, are still...
Giant green candlestick on NVIDIA. Holy smokes. Look at that.
You look at Lineage, the biggest offering of the year, raising more than $4 billion in the REIT space, up about 10%. Investors are being rewarded, but a lot of founders and boards raised cash in 2020 and 2021 at far higher valuations. So now you have to have that conversation about what are we actually worth and what kind of a discount do we need to give investors to buy the IPO so that we can talk about being up 40 or 50% as opposed to being, you know, like a company that's like Rubrik, which is up 11%, even Astera Labs, who went public last year, which is closer to unchanged after almost doubling in its first day.
And so I get the thinking that, okay, if we're not going to go public by November 5th, maybe we just wait until next year. But you think about some of the risks on the table. Do you think that the landscape will have meaningfully changed in 2025? What's the logic there?
Well, when we sat down with the heads of pretty much every bulge bracket bank last year in November, the conversation was, you know, 24, we're going to have 4 or 5 rate cuts. We're going to have some election risk that'll eventually kind of play itself out. It feels like we're having that same conversation. Yes, there is a timestamp for the election, so we will most likely be kind of moving on from that risk come January, February, and we are expecting, as you guys have kind of talked about, the Fed to cut in September, and potentially, at least when you look at the swaps market, potentially the next 5 meetings. But the big question is, will those interest rate cuts play out? How will investors react to a potentially riskier environment? And how does that impact some of the valuations that a number of these companies that have been waiting to go public, trying to kind of tease out what their actual valuation would look like? Their view is that they'll have a better kind of line of sight come March to May.
You kind of have to also think, I think, about who benefits if you...
March to May? What are you expecting March to May? Just recession or not, maybe, I guess.
A lot of employees have stock in these companies that want to continue to see those companies do well. Is there a benefit actually to wait and see if valuations correct?
Well, it really depends who's selling, and there is kind of just that argument that taking a perceived down round can hurt some egos and hurt some expectations, or even just hurt morale. If you raise cash and you're an employee and you were worth $60 billion and you go public at 20, then you're looking at your options saying, well, this isn't really what I signed up for. But on the flip side, if you go public and only sell a small chunk of your stake, in 6 months from now, if you're a private equity sponsor, you can start capitalizing. Or if you're a company like Kava that's up 400%, that's a still hefty return that maybe when you went public at the IPO, you weren't as excited about that price and valuation, but if you continue to execute and don't have missteps, you're going to be looking better in the end.
All right, Bailey, like 45 seconds. We're talking, of course, a lot this year about that dearth of IPOs, but I thought this was interesting under your byline this morning, a SPAC. I haven't heard that phrase in a while. Yeah, let's talk about it.
That is a pretty incredible reversal there. You've got... right now, the Qs have broken above the open. You've got an uptrend now of 3, 4, 5, 6, 7, 8, 9, 10 minutes of uptrend here. You've got NVIDIA that went green. Look at that. Straight 10 minutes up. It's remarkable. You had about 17 minutes of a downtrend, and now you're at about 10 minutes of up. So I'm kind of curious about that. So if I write that down, 17 min down, 10 min now, roughly. It's more like 9 min of up. So here's Tesla. Tesla nowhere near as violent to the upside as some of the others, but Apple just skyrocketed right there at about 947. So did NVIDIA. Supermicro slowly trying to come back. Microsoft had this weird little rocket ship as well. Let's take a look. I want to see if there's any 7 o'clock data coming down the pike. Let's see here. No. Wait. Consumer confidence. That is. Oh yeah. Oh, we have consumer confidence. Oh, okay. That is just the surveys at 100.7. So we'll get consumer confidence in about 3 minutes. Well, that'll be interesting. And yeah. So we'll get consumer confidence, present situation, consumer confidence board, expectations, Richmond manufacturing. Those were just the surveyed numbers. I misread those earlier today. Oh well. Dallas Fed, services activity. All right, fine then. What else is going on? We got BTC now rotating back down. Look at that. Yeah, they're at 948. It bottomed. 2, 3, 4, 5, 6, 7, 8-ish minutes of uptrend. Now you're going right back to the downtrend. Q is rotating down, but let's see. It's trying to hold on. And NVIDIA is holding on to its positive. All right, we are now 2 minutes away from the data. 2 minutes remaining. Yes. Yes. What are we going to do in the next 2 minutes? How about a party? I don't know. All right. What do we got? Minute, 10 seconds. All right, let's pop over. I want to see if we're going to get Angry Rick today. I just love it when an Angry Rick. Why does everything look like they're double topping or on the downtrend on the weekly? Because they are. CNBC's on commercial, 50 bips now on NVIDIA, and 50 seconds away from data. Let's get some suspense music.
House of Pain.
Tesla down 1.7, lows down 1%. Bitcoin trying to figure out where it wants to go. AMD can't really hold on to green. Meta, Microsoft, trying to watch these to see where the Qs are heading. Capped out a little bit here on the Qs, but let's get this data. All right, here we go. And confidence, comes in better than expected at 103.3, hence the probably this green candle over here. 103.3, expectation was 100.7. However, the Richmond Fed Manufacturing Index comes in at -19 versus the -14 expected. So I don't know if that was too particularly useful. You did get a slight upward revision on the prior consumer confidence read. And a lot of people are heavily focused on the consumer. So it's possible those numbers could be seen as pretty good. Both the actual survey for August and the revised survey for the prior read were positive. However, that Richmond Fed number coming in lower than the prior and lower than the survey for Richmond Fed manufacturing. All right. So let's see. Qs seem to like the data overall. Just it might be a little hard to tell. You got a couple minutes, maybe 4-minute uptrend now on the Qs, and the data seems to be supportive of that. Bitcoin does not seem to like the data. Tesla's plummeting. I don't know. I mean 2%. I don't know. Maybe it's not a plummet, but it's certainly falling. Whereas Apple's just reaching for the moon over here. Nvidia capping out a little bit, AMD rotating, Rocket Mortgage down a little bit. Yeah, because I think yield spiked a little bit this morning, which I thought was really interesting. Well, you get a yield spike. There's Tesla. You're still sitting at 4.5% on yields today. It's crazy. Super Micro's only down 3 now. Look at that recovery. It's actually kind of remarkable. Yeah, look at that. 3.7%. And then they'll come out with a statement and go, oh, it's all false, blah, blah, blah. So, all right. Oh, look, there he is.
For consumer confidence from the Conference Board, expected to be around 101 or slightly lower, comes in much better at 103.3. That's the best, since February of this year. And in the rearview mirror, of course, we see a subtle revision from 100.3 to 101.9. Present situation expectations, don't quite see them yet. My apologies. Now let's go to manufacturing and service, shall we, from the Richmond Fed. If you look at manufacturing, -19, we're expecting -14. What's notable here is that this is the weakest since May of 2020. It's the 10th consecutive negative month in a row, and we've now had only 2 positive numbers in this series in the last 2 years. If you look at the service side, really not much better. We now have 30 consecutive months that are negative in a row at -13. These are August reads, and of course we will be tickering present situation expectations when they hit the wires. Wilfred, good to see you, and back to you.
Same info.
Great to see you, Rick. Thanks so much for that. Well, let's discuss all of that data and where markets and bonds are trading at the moment. Of course, coming off the back of the Dow coming in with a record closing high last night, even if David doesn't care massively about that. Materials, financials, and staples all hitting new highs themselves recently. Let's bring in now the chief U.S. equity strategist at Citi, Scott Cronut. Scott, great to see you. Thanks for joining us. My first question with the moves we've seen over the last couple of months, talk us through your take on where valuations are for the S&P 500 and where sentiment is more broadly towards equities.
Oh, Wilfred, great being on. Okay, so let's touch on these. I think it's pretty important. So in terms of the aggregate PE for the S&P, with this latest move, we're back above 23 times earnings, which historically would say don't expect much positive out of the S&P for forward 12 months. We tend to use another gauge that goes alongside this that we refer to as implied growth expectations. And when implied growth expectations get overly extended, it puts a really big burden on companies to not just beat, but then exceed and raise guidance fundamentally.
Yeah, exactly. The beat and raise requirements.
Expectations have surged to a higher level than we were prior to the drawdown at the middle part of July. So all told, we're looking at the valuation setup a bit more balanced here. We still think fundamentals are in good shape. Sentiment, it has come off of our euphoric reading. So despite the move in the S&P, we think we're in an okay place as far as the sentiment backdrop goes.
We were talking yesterday about the broadening out that's been taking place in the rebound of the last couple of weeks. Is that unreservedly a good thing as you look forward from here? Or is there also an argument, I mean, you touched on the broad valuations already, but is there also an argument that now there's not much left that's kind of cheap?
Well, it's a really good question. Okay, so let's just talk about a couple of things here. Second quarter earnings, the Mag 7 gave us a 38% earnings growth. Okay, pretty spectacular. The other 493 gave us a 5% earnings growth. Not bad, not like mega cap growth, but importantly, that 5% growth was the first time in the last 6 quarters we've actually seen this inflection to positive growth. If you play it through to 2025, you begin to see a setup where there's a narrowing of the growth delta in consensus expectations between value versus growth in large cap, but also between small mid cap and large cap from a size perspective. The S&P 500, whether it's the Mag 7 or the other 493, are trading in their top decile of historic valuations. So they're not giving these stocks away by any means. However, when you go down cap into the small mid cap world, you're looking at valuations that are low relative to large cap, but also lower versus their own history. So if we do get this earnings inflection, as consensus is pointing to going into next year, we don't have a big argument with that. We think this opportunity for a continued broadening exists, and it's necessary to get higher index levels. You can't all be on the mega cap growth leadership. It needs to be supported ultimately by this broadening discussion, which David will tell you we've been talking about for several months now.
Scott, what do you see as the biggest risk to the rally, to the market right now? Ed Yardeni says it's actually geopolitics, not a recession. Do you think it still is a recession at these levels and kind of what you're seeing in the data, or is it something else?
Well, I think it kind of comes back to what I was getting at earlier. You're spot on with this. So if growth expectations are getting fairly extended in terms of what's being priced in, and that's telling you that this conviction around soft landing is in pretty good shape, but then you begin to see continued what we've been saying is fraying around the edges, then you begin to set yourself up for some fundamental disappointment. Now, I think the big issue or elephant in the room, if you will, is regarding labor, and this has been much discussed. But our city economists are of the view that, great, you're seeing some weakening in economic or labor conditions. The risk is if they begin to cascade lower, then you have a more onerous spending backdrop unfolding. Personally, we're not seeing that in the fundamental data, but that's what we're certainly all eyes focused on from a risk manifestation angle.
Scott, taking it from the macro back to the market, how important are these NVIDIA earnings that we're going to talk about endlessly between now and when they come out after the bell tomorrow?
David, I think they're pretty important. I mean, I think, again, go back to middle part of the year, S&P was up 15%, and 5 percentage points of that gain was NVIDIA alone. The rest of the Mag 7, another 5%, the other 493, 5%. So there's no question from a basic index weighting perspective, the importance of NVIDIA is very clear on this. But I think in terms of what I was getting at earlier, this AI spending and AI productivity enhancing tailwind, I think we need to continue to see evidence that that's playing out. So it won't be the earnings result per se as much as it is what we're talking to in terms of a guidance going forward.
Scott, just finally, I was interested in your view on the US dollar and whether you think it's going to continue on this weaker trend and how much that influences, I guess, not so much just your sector selection and the type of stocks you'd want if it does continue to weaken, but whether it worries you at all that there's something bigger going on, that we're about to see more of a recession materialize or more major debt problems actually take an effect on the U.S. bond market and the U.S. economy. Is it something you're watching closely or not really?
I watch pretty closely, but I'd say that the dollar read is getting a little bit mixed here. Generally speaking, I'll take a weaker dollar as evidence of more confidence in global growth. And you can get to that point where we're looking at what's happening with central banks around the globe, perhaps end of hawkish scenarios.
I think it's almost certain you're going to get, I mean, you'd never want to be certain in stocks, but it feels almost certain the dollar is going to weaken as yields come down. But then again, if everybody's already expecting that, maybe not.
Monetary debasement. And that's an issue that is much more difficult to really analyze and assess. But there, the concern is that you begin to see that reflected in the dollar. Now, all told, as long as the dollar is perceived as your reserve currency, it's less of an issue. So we got a balancing act in terms of how we're thinking about the dollar right now. But generally speaking, I'll take a weaker dollar as a positive for risk assets.
Scott, thanks so much. Good to see you.
You bet.
Do you have a favorite sector? Do you have a favorite sector?
A favorite sector to buy right now, or no? You're not asking.
Let's flip on over. All right.
Investor appetite to move out of the safe investments that are giving you a decent return here into more risky investments. But if the risk appetite is still so precarious right now, then how does that money really start to move?
Well, we'll start to get a little bit more certainty as we enter the tail end of the year. Certainly, again, it looks like we're going to get a rate cut in September, and then we'll get closer to the election. Hopefully, we will know who the president is in November, and we'll start to get a little bit more certainty around what the regulatory and tax environment will look like. And as we know, whatever the outcome, companies will adjust to that outcome. And that certainty will help, I think, start to get investors a little bit more comfortable with where they want to be longer term positioned. So I think it's going to take a little bit more certainty. We expect volatility to continue kind of through year end. And of course, I left out the macro as I focused more on the micro, but the macro data, we are not ignoring. It's certainly something our teams are paying close attention to. And I think the jobs data is something that is going to be critical, not only to the Fed, but to us as well, to signal, how secure really is the economy and are we at risk of a recession? And potentially how deep could that recession get if we are going to enter one?
Yeah, absolutely. A lot of focus, a lot of questions on the labor market right now. Good place to end it. Ann Milletti of Allspring Global Investments, appreciate your time. Meanwhile, the S&P 500 basically back to unchanged. Let's get a look at what stocks are moving underneath the hood right now with Abigail Doolittle.
It's interesting. Beneath the hood, another tug of war happening between the bulls and the bears on a macro level. We'll take a look at that in a moment. But first, we do have at least two idiosyncratic movers to take a look at.
The Qs are about to go green, just noticing. And then you've got, what's really interesting, I find it fascinating, is look at BTC fall. BTC has really been falling, for about 20 minutes now? Yeah, about 20 minutes, 19, 20 minutes of declines on Bitcoin. And it keeps going down. Yet as Bitcoin keeps going down, the Qs are actually rallying up. Look at that. Kind of remarkable. Driven by Apple, in some part Nvidia, in some part Supermicro recovering. Dell's in there. You got Tesla still kind of bleeding down, so Tesla not really following. So it's almost like Tesla and BTC, they're the losers right now. And the tech side is just rallying. Look at that. Look at that. It's wild. So it's really, really interesting. Showing some of the ouchie wouchies there on some sectors, but not all of them. So yeah, look at that. Even Tesla just had another leg down. Again, now down 2.4%. It's over 2%. And the Q's just barely there, knocking on the green door. Although they did just have a little red candle as well. Surprising though, you'd really had this downtrend that started over here at 9:35. You had a good 5-6 minute downtrend. Then you had some volatility a little bit of a bottoming process, and then you just had this violent run up, and it just didn't reverse back down. But who knows? Maybe that's coming now. Look at that. Tesla down 2.7 right now. And Bitcoin does have a support right here. 61,741. Yikes. Let's see here. Okay, what else? Okay, let's go with... Let me see what's going on at CNBC.
Tomorrow, how options traders are betting ahead of those results.
Plus, NFL owners meeting today to vote on whether to allow private equity to invest in teams.
BTC bouncing here.
Reporting on that coming up.
And just weeks ahead of its next iPhone release, Apple is making some big moves in the C-suite. It replaces one of Tim Cook's longtime lieutenants. We're going to have more on what that means for Apple and, of course, its growth plans. Big show ahead. Squawk on the Street, right back.
Apple keeps running, too. Look at that. Look at that push. This has been, you've been running since about 47. So you're looking at 10, 20, you're almost 30 minutes of straight up on Apple. Gotta give Apple credit. That's pretty good. And Tesla almost down 3. It's such a weird kind of, how would you call it, dynamic, I guess you'd say, that you would see, Tesla falling like this, yet Apple and the Q's up, and BTC falling as well. So you get two groups here, and usually they move together. So, a little strange. Makes it a little harder to find a trend for sure. Yeah, look at that. Tesla keys, the same time frame almost that Apple's been rising, Tesla's just been falling. Little bizarre. Okay, let's see what else there is on Topper. Okay, we talk consumer conf. Let's see. Oh, I wonder how the betting odds right now are for Harris. Poly market. And let's go to predicted. Let's see. Okay. Trump has a little 1 percentage point lead over Harris right now on Poly market. But she has an 8-cent lead on Trump on predicted. Pretty wild. Yeah, look at this. This is crazy. You got Tesla now down almost 3 full percent. Crazy. Aggressive, eh? Amazon down about 173. All while Apple continues its run. Oh, it could be in anticipation of the iPhone event. Buy the rumor, sell the news. The iPhone event is September 9th, by the way. So mark your calendar for that if you have not yet. All right, let's listen in over here.
Lily's story with the author. We're joined now by Madison Muller. She is Bloomberg's healthcare and pharma reporter sitting next to me on set. So I want you to square this circle for me because, okay, they're lowering the price. Won't that just boost demand and they're already struggling with making enough supply?
Right. It's a good question. The issue for Lilly, though, which maybe we've talked about on the show before, is the complexity of making these auto-injector pens kind of has bottlenecked supply. So that's been the issue for them. It's such a complex process that it slowed it down a bit when demand, as we know, has been soaring. For Novo Nordisk, the supply issue has actually been making the active ingredient that goes into this pen.
Semaglutide.
Semaglutide, yes, exactly. You're a pro. So the problem's a little bit different. But for Lilly, this actually is expected to potentially be a positive to sales because they can sell more of the drug.
So what does this mean for the overall supply challenge? Because another thing we've spoke about before is in the race to get ahead on supply, Lilly has sort of been winning.
Yeah, exactly. I mean, I think this is another example. We saw Novo's shares fall this morning because they don't really have this same lever that they can pull when it comes to supply. I mean,
Tesla's now recovering a little bit, might be creating a bottom.
That would help Novo when they just can't make enough of the actual drug that goes into those vials. So for them, they're still ramping up supply, building out more production capacity, as is Lilly, but they don't really have these same levers that they can pull on right now.
And let's talk about the competitive landscape, too, when it comes to pricing. Obviously, that has been one of the hottest button issues out there. Lawmakers, et cetera, everyone getting involved. You have Lilly lowering prices right now. What does that mean for Novo Nordisk?
Yeah, I mean, it puts more pressure on Novo. Lilly's drug launched actually cheaper than Wegovy to begin with. So Zepbound is about $1,000 a month. Wegovy's a little bit more. So you already had that dynamic at play, and now Lilly is offering this even cheaper version, which puts more pressure on Novo. It also puts more pressure on these copycat weight loss drugs that we've talked about, that people are seeking out these cheaper knockoff versions of the drugs, and now Lilly has this cheaper version that they're offering. So there's a little bit more competition happening there now, too.
Well, more on that. What does that mean for overall price improvements? We spoke to kind of a competitor yesterday to GLP drugs. We spoke to the CEO of Curax, and this whole idea of pricing is pretty paramount to someone like that.
Yeah.
What happens to the other drugs?
I mean, that's a good question. For Zepbound, it's actually not totally clear what's happening. We need to look into the data a bit more about how this affects average Zepbound price, because Lilly also did raise the price of a savings coupon for Zepbound either this morning or last night. They raised it by $100. So that's for people that have insurance, commercial insurance, that doesn't cover Zepbound. It used to be $550, now it's $650. So there's a little bit of kind of like a dynamic happening where Lilly's lowering the price, raising the price of the coupon. And so how that affects sort of overall prices is kind of unclear still.
All right, Madison, great reporting as always. Our thanks, of course, to Bloomberg's Madison Mueller. On Eli Lilly, shares currently up about 1%, adding to a 66% year-to-date rally. Now, still ahead on this program, more on the arms race to sell pharmaceuticals directly to patients. We'll tell you about a new initiative from Pfizer in our social.
Direct to patients. No pharmacy for you.
Will not to access Apple.
Pull the Elon. Direct to customer. Let's listen to Ives. He's usually our tech bull. Resident tech bull.
Just like the enterprise revolution is going through Godfather of AI, Jensen, NVIDIA.
What are those apps that you think are kind of a need for people, that they'll say, oh, well, I know someone who has upgraded and they're able to do XYZ. Now I feel the need to do XYZ. What is the stickiness of that product?
Yeah, it's a great, and it's all about developers. I mean, developers, that's the lifeblood of Apple. And right now, with Apple Intelligence, with iOS 18, they're going to be building hundreds of apps that are going to be AI-driven, generative AI. So it's not just about open AI, how a typical user will be accessing their actual iPhone, whether it's health, fitness, a lot of functions that we see consumers. When we talk about AI, this is really going to be the device. This is the start of the consumer AI revolution. And many will say, well, what about Samsung? What about others?
Yeah. Listen, I'm going to start a conversation we're going to have to continue on your next time here because we've got to wrap up. But what about the idea that as AI moves to the edge, moves to the actual device, right? I don't need apps anymore at all. I'm just going to be able to talk to it, and it's going to do whatever I need it to do, and therefore Apple becomes sort of superfluous.
Yeah. And that's a great point. Apple's one step ahead because they recognize that ultimately the hearts and lungs of their ecosystem are the apps. So they'll provide the building blocks. That's what Cook talked about WWDC. Developers will provide the actual functionality. And that's the success of Apple, and that's why Apple continues to play chess and others play checkers.
All right, Dan, I have a feeling we'll see you soon, maybe as soon as NVIDIA numbers. Thank you.
Yeah, thank you.
Who's playing backgammon?
Look, and then you have Intel that's playing...
Something in between.
Intel's playing checkers at the kids' table.
I want to know who's...
You had to ask, didn't you?
I did.
Yeah.
Backgammon's a great game. Chess, too hard for me.
Is it?
And I say Microsoft playing some backgammon.
But I don't think I'm the checkers player. Backgammon, yeah.
Microsoft's sophisticated. I mean, if you look and you kind of scale it, you got Intel playing checkers at the kids' table. You got Apple up here, and then you have Microsoft. You got Godfather.
See, David, it was a good question, and this will be in one of his headlines of one of his notes in a couple of weeks, and I look forward to seeing it.
The headline will be that you don't know how to play chess.
I do know how to play chess, but I got beaten by a 15-year-old live on Sky in 32 seconds recently. He's the youngest ever. Is he a grandmaster? Is that the phrase? Yeah. He's the youngest ever British grandmaster.
Wow, look at the Qs.
Gained the lead.
Qs just went positive. A little rally just popped out. You've got Qs ran up. Tesla now rotating up. BTC's rotating up. Everything's now pumping. NVIDIA pumping. Did yields move at all? Let me see what's going on with the yields. Bond yields. No, I've actually come down a little bit. Only up 3.4. You were sitting at about 4.5 there for a moment. Wow. Wild market day. Look at that. I mean, it's been straight up basically since 47. So almost 40 minutes there of straight up on the Qs. You really, it looks like you're just coming for the 476. Like we always like to say, trust the lines. I'll trade around the lines. The lines have historically been good to people. No guarantees, obviously. And who knows? Some of these lines could break at any moment. But very interesting. So, oh, look at that. It's trying to go right through the line now. Wow, what a little rally here. Look at that. NVIDIA almost up at 1% now. Almost. It's at 80 bips right now. Holy smokers. Now you're in a little bit of an overbought condition. That's crazy. But makes sense. Okay. Wow. So now we must evaluate. Let's see. Direction of day. Uh-oh. Oops. I didn't mean to push that. There we go. Yeah, look at that. Right on the line. Apple's still trending up. That's a hard trend to fight. Look at that. That's one hell of an uptrend. And wouldn't fight it. Oh, look at that. Starting to get that rejection right at my line. Right at Kevin's line. That's scary. People still think TA is Fugazi. It is. Craziness is what it is.
Don't buy. Don't buy.
Anyway, let's see if we can break through it. All right. What else? Anything else? Pretty good today.
Jeremy Waxman next. Fascinating conversation. Looking forward to that one. Stick with us.
That's boring.
Or go to getfridayplans.com now.
Nope. Lots of boring.
Cancer. FDA approved for...
Nope. Everything's on commercial. Fine then.
Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker.
There you have it. Thanks so much for being here, everybody. We'll see you in the next one.